Are you wasting too much money and time trying different strategies and nothing is working? Now you're upset, you don't trust anything and any strategy anymore. You think retail traders cannot make money, but only institutional and big hands. You simply don't want to try anymore. You're tired, you're concerned, you're afraid, you're scared. Well, all of this. How many times, traders, you felt like this? Especially when you're still trying to figure out the way you can make money in trading. I've been there, I know it. And I really feel shit. I can tell you that I've been trying everything in different markets. When I was doing stocks, futures, Forex, I tried even CFDs, I tried small caps, everything. But for everything out there, there's a solution. Just think about this. Look at, in the last year, how many profitable and professional traders that I brought over here on the podcast. These traders are reliable, these traders are accountable, these traders are successful. And why? Because they cracked the code, because they found a strategy that works for them. Now, the first thing that you want to do when you begin to trade is to find a simple strategy. But the simple strategy has to be something unique, something that you know is repetitive, something that you know is profitable, something that you know ideally is going to turn your small account in a big account in a short period. Now, the best thing for me is that invest in yourself. Because just like going to university, right? You want to become an engineer, I don't think you can build bridges or buildings in about 1 year. It will take 4, 5, 6, many years. And you have a teacher, many teachers, right? So you need a mentor. I'm going to share over here a strategy. And don't get me wrong, this strategy can be improved, but this strategy is profitable. I will leave the strategy to you to figure out more when to use it, instead of telling this works 60, 70, 80, 90% of the time. Because there will be specific criteria that you have to learn. But this is the best strategy I would trade if I was a beginner. The first thing you want on your chart is to individuate the trend. The first thing we want is to define the trend. Take a 50-minute chart, as you can see over here, and just put an exponential moving average 200. Some will prefer the SMA, simple moving average 200, or some exponential moving average 200. This is called the institutional EMA, or the institutional moving average. As I said, both SMA or EMA are fine. And start looking when this has a cross to the upside. We see, for example, that in this zone, we have a price that is going over and under the 200 exponential moving average. So this is the zone of no trading. This is called sideways zone or consolidation area. At this point, we have a break of this range. You can see exactly over here. And then we start forming higher low. So from this point, from the break of this range, we'll start considering a bullish trend, which is a bullish trend is a sequence of at least 2 higher lows and higher highs in the same direction. That forms a bullish trend or an uptrend. So don't really pay too much attention to the sideways range over here, but start looking for those breakouts here, and then start looking for all this zone over here to the upside. Now, this is the first thing. The second thing is that you have to look for a pattern. We will have our resistance, and you will see this is the price action. You'll see the price doing this. So we'll have a breakout, price will retrace, we'll have the fake breakdown, and then a push to the upside. So what we can say, first of all, bullish trend form over here, and we have it from this point. Second, we're going to have a pullback. So we're going to have a pullback towards the level of support. you can see over here. And then we'll have a breakdown of this level of support here, and then a reclaim. And we're going to long exactly into this area, risking this low. So what I'm teaching over here is pullback in the direction of main trend, but not the simply pullback, just after a major fake breakdown, called also bear trap by the traders. We have fake breakdowns, but essentially is a bear trap. Let's look together over here. And let's take the first example. In this case, we have Tesla, but this can work on other products, futures, other stocks that have a bullish trend. And we're gonna look, as we said, 1, for an uptrend or a bullish trend. 2, we're gonna look for a pullback. 3, we're gonna look for a support. 4, we're gonna look for a breakdown of support. 5, we're gonna look for a reclaim long. And over here, we're gonna number them. 1, 2, 3, 4, and 5. This is your plan. This is the strategy. So over here, we're gonna put pullback plus bear trap. You need that bear trap, traders. Now, the first point over here is that we have an uptrend. Why? Because we have a sequence of higher lows and higher highs above the 200 and the 5. So we have these higher lows, higher highs. So we have a bullish trend. Now, bullish trend means higher lows, higher highs. You have to know what fractals are, or relative low, relative highs. And this we can explain next time. Actually, traders, if you want a video on higher lows and higher highs, how to find fractals, how to see and understand a trend, just reply down into a comment and ask me new video on price action. And if I have several comments about it, I will make a new video on that. Over here, what we see is then a pullback. So with a pullback, we form not anymore higher lows and higher highs, but we form a lower high and lower low. So when I'm looking at this price action, this is the relative low that I see over here. This is the relative high, relative low. I can do this, relative high, relative low. At this point, we see a lower high because this high over here is lower than this. And this is a peak. And then we form a new lower low. So we can say that at this point here, there's a pullback. Now, once you see that, we have point number 2, pullback. Then we need to see a support. So a level where we had several bounces or rejections. What it means, over here we had, for example, a bounce. So this is a level of support or a level of demand. And over here we start seeing a bounce, but could even be that before this level over here was a level of rejection where the price was getting into there and rejecting. So a level of resistance can become a level of demand. And now look the beauty of this. We have number 3. So again, pointed out, support, because it's basically this level. So we can do this. Over here is a level of resistance or supply, demand, so support. And over here we crack the support. You can see we break down. Now everybody over here is thinking, oh wow, breakdown of support, we're probably going to unwind. We have a level over here that we're breaking down 180. Next, catalyst, what really is in the mind of traders. Over here we're going to get probably to the 170. So this is the point. And in this case, we can write over here number 4, break of support. So everybody is expecting from 180, this goes to the next $10 mark. Could be, for example, 180 to 175, but generally we tend to go in 10 points and 10 points. This looking at something like Tesla. And then we have the timing of entry. So what happens over here? We have the breakdown. You will need to see over here the failed, okay, all the way down. But instead over here, it starts to reclaim. And over here we have, as I said, reclaim long. What is a reclaim long? Is essentially the confirmation that the breakdown is formed, but then we go back and close above that level. And you see this level is the support level that we had before. And we close above over here. So now where I'm looking to long in this area over here, once we confirm that we had a close here above the support, I'm looking to long exactly into this area. I'm gonna place my stop not at the relative low, because often this means risking too much. I'm gonna place a stop below the support, and then I'm going to look for a new move to the upside. What is going to be my risk reward? That makes the system profitable, because I cannot simply work for 1 hour, risk 1 hour. That's not me. That's not what is going to make you rich in the long term. So let's look together. If our stop, so I'm going to make this red so you can see it better. First, where's the entry? Here, this area. Where's the stop? This area below the support, right? So we're risking over here this amount. Now we want this at least at 2R, so 2 times this. Otherwise, there's no really point of taking the trade. And how to know where is going to be your next target? Well, look, traders, at the next level of resistance. We can see here, we have the resistance, a resistance, a resistance, a resistance. Okay, that's my main next level. Just trace it to the right of your screen. And over here, if we're risking this, and we're gonna make this is our target, we have visually at least 3 hours. Now we'll calculate how much this is. So we're gonna make it here. So this is 1%, okay? We're looking almost for 5%, so almost 5 hours over here. And we can also double check with the price. So our stop is gonna be 179, the entry in the area of 181, so risking 2 points, 181 till 189. We're talking about, 8 points, so at least 4 hours. This is a trade that I'm going to trade, okay? So very simple, but very effective and profitable on the long term. Now, there are more things to add to this. For example, I will use the lower time frame to find the perfect timing of entry. Lower time frame could be a 1 minute, 3 minutes, or 5 minutes. And also we'll use the higher time frames, so higher time frame analysis, HTF, to find the best spots to take these longs and exits. When you have all of this, the next point I'm adding order flow. That's the reason, one of the reasons why I teach in the room and also on YouTube every Wednesday how to use Bookmap. And you will find that together, those 3 components, so the strategy that I just shared over here, together with the lower time frame, higher time frame analysis, and also Bookmap, they will give you the best odds of success. This setup works on this time frame. This setup works on multiple markets. What you have to do is simply track it. We'll see other example right now on this precise pattern. So we see another one over here, and we're gonna put our numbers. So we have number 1, the trend, higher lows and higher highs. Number 2, the pullback, so we're pushing down. Number 3, the support. You can see the area over here, bounce, 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 breakdown of this, and 4 is the breakdown, 5 is the reclaim. Again, where you're gonna put your stop loss. I'm gonna simply set my stop loss below the support. So this is gonna be my entry, and that's gonna be my first target. Why? Because this is a clear level of resistance. And you can see that at least we have 2R over here. So profitable strategy. Then after, you can simply hold as this will continue to run. And again, what we have over here, we have another same setup. 1, bullish scenario, higher lows and higher highs. 2, what we have, a major pullback because the price is making lower highs, lower lows. 3, we have the support. 4, we have the breakdown. 5, we have simply the close again over here above our support. Now I'm gonna put the risk. This is my risk. Gonna look for the next resistance, and then I can simply start trailing and holding for more. This is the J pullback bear trap long. So traders, if you wanna experiment this, what I tell you is first try on demo, start annotating, retrading before going live. Join me in the room because you will see how we traded together with other many strategies, and you will simply stop losing your time, losing your money, just going on so many different strategies. Become an expert in one. Good luck.